Aotearoa, and welcome to Friday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we start with news global trade is rising, and quite impressively, but the US is being shunned, or shunning itself. But first, US initial jobless claims rose more than 29,000 last week, marginally more than seasonal factors would have accounted for. But there are now just under 2.2 million people on these benefits, and quite a bit higher than a year ago. Modest hiring and rising firings are driving these trends. Although the December month layoff data was unusually low, it does cap a full-year layoff level of just over 2 million people in the US, and the most since the pandemic, and prior to that, the most since the GFC. Analysts are expecting tomorrow's release of the December non-farm payrolls report to rise to 60,000, similar to the low November level. In their December survey, the New York Fed reports that it shows US labour market expectations worsened. Almost 1 in 7 people expect to lose their jobs in 2026, and short-term inflation expectations ticked up to 3.4%, but are actually unchanged over the longer terms. US exports rose and imports fell in October in data released overnight. The US trade deficit narrowed sharply to $29 billion in the month, the smallest gap since June 2009. Exports rose 2.6%, or by $7.2 billion, to a record $302 billion. Imports declined 3.2% to a 21-month low of $331 billion. But it is really a story about gold flows more than tariff effects. Precious metal exports rose $10.2 billion in the month, and without those, exports would have fallen. Imports of gold fell $1.4 billion. Their largest monthly gaps were recorded with Mexico, Taiwan, Vietnam, and China. The trade gap with the EU narrowed sharply. Canada also reported trade data overnight. In October, Canada's merchandise exports increased by 3.4%, while exports were up 2.1%. As a result, Canada's merchandise trade balance went from a small surplus to a small deficit. Basically, they remain in balance on this measure. But the transition away from trade with the US is sharp. Again, these flows have large gold components too. In China, private analysts show that their property market slump deepened in 2025, with new home sales shrinking 9% to levels not seen before 2010 and falling by roughly half from their 2021 peak. Total sales value fell by nearly 13%, according to these respected analysts. Japanese consumer sentiment, which has been improving since April, hesitated in December at just below the November level. Another improvement was expected, although the difference is small. It was a very similar story in the EU, with a December hesitation after a 9-month string of improvements. Meanwhile, the survey for the ECB on consumer inflation expectations there shows them unchanged in November at 2.8%. On the industrial front, however, producer prices fell 1.7% in November from a year ago, more than the 0.5% in October, but less than the deterioration of the 1.9% expected. They actually rose slightly from the prior month, and by a bit more than anticipated. German factory orders rose sharply in November and by much more than expected, up 5.6% in October, up 10.5% from the same month a year ago. In Australia, the trade surplus narrowed in November as major commodity exports fell and capital goods imports signalled a possibility of softer business investment in the December quarter. Globally, air passenger travel rose 5.7% in November from a year ago. International travel was up 7.7%, but it was all driven by the 7.8% rise in the Asia-Pacific region. Meanwhile, air cargo traffic rose a similar 5.5% in November, also driven by the 11% rise in international cargoes in the Asia-Pacific region. North American flows declined. Global shipping container freight rates rose 16% last week from the prior week to be now 35% lower than year-ago levels. Outbound rates from China to both the US and the EU rose sharply. Bulk cargo rates fell 6% last week and are now 25% higher than a year ago. The US Treasury 10-year yield is now just under 4.18%, up 4 basis points from this time yesterday. And the price of gold will start today at $4,460 an ounce, up just $2 from yesterday. Silver is down $2 at $76 an ounce. American oil prices are up $1 from yesterday at just on $57 a barrel, while the international Brent price is just under $61.50 a barrel. And the Kiwi dollar is now 30 basis points lower from yesterday, now just under 57.5 US cents. Against the Aussie were unchanged at 85.9 Australian cents. Against the euro were down 20 basis points at 49.3 euro cents. That all means our trade-weighted index starts today at just over 61.5 and down 30 basis points from yesterday. And the Bitcoin price starts today at $90,887 and down 0.4% from yesterday. Volatility of the past 24 hours has been modest again, at just on plus or minus 1.2%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. We'll do this again on Monday.